What's going on, everybody? Stocks by the numbers. Welcome back. Wanted to do another quick analytical video here looking at SentinelOne, ticker symbol S, listed here on the New York Stock Exchange. This is a cybersecurity company. Recently posted earnings. Stock took a little bit of a hit. I know someone did mention it a while back. My apologies that I just forgot about it. I didn't get to it. And of course, the company ended up reporting earnings and chunked down a little bit. But let's look at what's going on here. So this is a cybersecurity company. Again, ticker symbol S. Stock right now trading 22 and 3/4, down about 40 cents, about 1 3/4% here on the day. This company actually has been growing very, very nicely. And the problem is now we could potentially make the argument that we just went too high too quick. So now we had to chunk down, but also at the same time, guidance a little bit light. So let's get into the numbers. First of all, they posted earnings, as you see, about a week ago. And you can see they beat very nicely on the EPS side, posting a loss of 2 cents. Estimates were a loss of 4 cents. They beat on the revenue side here. Estimates were a little over 169 million. The company posts a little over 174 million. And they've basically been doing that more times than not. So we have a market cap 6.8 billion now. They're losing over $1 per share. The EPS side has been very, very nice for this stock the last several quarters here, beating on the EPS estimates for the last 4 quarters in a row. Look at the annual growth here, going from tens of millions up to over 90 to over 200 million, to over 400 million, to over 600 million. So the growth of this company cannot be denied, and I can appreciate the fact as to why everyone is pretty pumped about it. First couple of things I'm noticing is, yes, it did chunk down. We could potentially have our big pull with our flag forming, so we could have a potential bear flag forming, which could bring us back down here to about the 20.5 level and potentially fill that gap before trying to bounce and go back higher. But this growth here on the revenue side is beautiful, in my opinion. They are widely negative, though. As you see, net margin percentage minus 54.5% on over 600 million. But it is growing nicely, and the net margin percentage is climbing up with the growth in revenue. So hopefully, if the company is able to get all their ducks in a row and consistently keep bringing in the revenue and growing their business, then hopefully over time for you guys, it can go net income positive and really take that next leg higher even further, potentially up into the 30s and whatnot, even though it did hit a high of 30.76. Again, could be potentially viewed as overvalued. We're talking about 620 million in revenue for last year with a market cap at 6.8 billion, which translates to roughly 11 times last year's revenue for a company that is still bleeding and again, just issued guidance a little bit lower than what Wall Street was expecting. So everyone still seems pretty bullish on it. I have a lot of fire trucks going by here. I can't even focus, but we do seem to have a lot of analysts still bullish on it, as you see. Even after these earnings came out, SentinelOne maintained that overweight. Morgan Stanley, Goldman adjusts price target to 26 from 28. That's still higher than where we are right now. Bernstein staying pretty bullish on it, as you see. Adjust price target increases from 34 to 37, maintains an outperform rating. But as you see here, share slump. Losses narrow here. Reported a non-GAAP loss Wednesday of 2 cents per share, narrower than the loss of 13 cents a year earlier. So that's moving in the right direction. Analysts were looking for a loss of 4 cents. Revenue was 174.2 million, up from 126 million a year earlier. So this company is really becoming a player in the cybersecurity space, in my opinion. You don't go from 40, 90 million up to 400, 600 million year over year. You don't make those leaps and bounds if you're not bringing something of value to the table. So if you're bullish on Sentinel, I'm not exactly knocking you, but again, all I'm trying to point out is some of the technicals that we looked at before that could potentially be lining up for a little bit of a better entry price here. But as long as the company really just keeps doing what they're doing, then chances are over the next couple of years, I'm sure you're going to make a nice profit, and we could eventually see a $40 or $50 stock here. But again, what happens is when we take these stocks too high too quick, as I always say, now the market capitalization, the actual valuation of the company has now exceeded the actual business that they're doing and bringing in. So we have to, in my opinion, bring them back down to earth and bring them back down to reality for a little bit. So the stock taking a hit, but again, it's on this guidance here as we see here. But analysts were expecting 169 million. They posted 174. Company said it expects fiscal Q1 revenue of 181 million and fiscal 25 revenue in the range of 812 to 818 million. Analysts polled were expecting 180.9 million, so slightly above those estimates moving forward here for next quarter. For the year, analysts were expecting 818.1 million. And as you see, they came out and they're looking for 812 to 818. So now the high end of that range is now below what analysts were expecting. So that's why, in my opinion, the stock kind of took that 10-12% hit or whatever it did after earnings came out. But again, we can see maintained 33 share price target, maintained that neutral by Davidson, price target raised 224 from 22. So the problem is this would be a hard stock to give a lower price target on, in my opinion, just because of how much and how quick that revenue has been increasing quarter over quarter and year over year. As you see here, Q4 earnings beat estimates, revenues up year over year. So this is what I mean. If we want to beat them up in the immediate short term for giving a little bit of a light guidance for fiscal year 25, then it's understandable. However, in my opinion, with the situation like this, you want to let them actually beat it up, in my opinion, and then you want to scoop up those shares at the discount and just keep buying the dips. And hopefully you can consistently average down with this stock. Annualized recurring revenue increased 39% year over year to 724 million. SentinelOne added a record number of million-dollar customers in the fourth quarter, indicating strong momentum in customer acquisition. Existing customers showing strong expansion, contributing to the net new AAR growth. Customers with AAR of more than 100,000 rose 30% year over year. Dollar-based net revenue retention rate was 115% at the end of the fourth quarter. SentinelOne is riding on strong demand for its cloud security and data lake solutions, with Singularity Cloud emerging as its most rapidly expanding solution. Continued to innovate products during the quarter. Purple AI and expanding its platform capabilities to address evolving cybersecurity challenges. In the fourth quarter, gross margin was 78%, significantly up from the 75%. Well, it's not significantly up. I mean, it's up. I don't know. Sometimes that's why sometimes I try to read between the lines like that, and I look at some of the specific wording that they use in a lot of these articles. But again, that's just me. I know we're all different. R&D expenses were 23.2% of revenue compared with 31.4% in the year earlier. Okay. General and administrative expenses were down year over year. Sales and marketing expenses were less than 48% compared with 58%. Okay. Total operating expenses increased 9.7% year over year. Okay. So they lost 15.9 million in the quarter, and as you see, a year prior they lost 43.7 million in the same quarter a year prior. So this is what I mean. The chunking up in revenue should eat away at losses that any company has, for the most part. Of course, I know I'm generalizing, but as I said, you want to see the more revenue the company brings in, the less they should lose, or on the flip side, the more they should make if they're profitable, right? So the fact that the negative net, again, the net margin, I understand it's bigly negative. It's sitting at around minus 50%. But again, the fact that it's consistently increasing with the revenue increases, in my opinion, I think that is a good sign. As of January 31st, SentinelOne cash 1.1 billion, in line with previous quarter. Cash outflow 10.6 compared with cash outflow of 26.4 million reported in the previous quarter. Yes, guidance is up. Yeah, see, even though this number is technically below the 818 plus million that analysts were originally forecasting, you can see it's still showing growth of over 30% at the midpoint of that number. So to grow 30% year over year, I mean, you probably can't go wrong, in my opinion, seeing that kind of growth. But again, we know these analysts, they put out their forecasts, they put out their predictions, and if the company says they're going to be a little bit light or they're going to be on the lower end of that range, then we see usually more times than not the stock immediately takes a hit. In my opinion, though, again, if the stock didn't go so high so quick, it might have remained flat or maybe even dropped just like, 2%, 3% on the news. But I think that because it was trading so high and it's basically been like a more consistent positive story, I think that because that slight negative came out, it was just one of the reasons to bring the stock down. That's why, in my opinion, I'm always a little hesitant to buy shares of stock in a company that has a very, very overinflated market cap, in my opinion, especially when comparing it to the actual business and revenue that the company is bringing in. Because I say it all the time, if they can find one negative to bring the stock down, they will probably bring the stock down. And again, guidance came in a little light, so the stock took a hit. But overall, personally, I like this stock. Again, I would just look for a good entry here. I would look for a good entry. And what I'm looking at is here, again, the company was bringing in 40 million and the stock was up here at $40, right? And now we fast forward here and the stock's bringing in triple that at 130 million and the stock's down here at 12 and 15. You understand what I'm saying? So unfortunately, we have basically another story, in my opinion, of a company that was just overvalued out of the gate. So you had some hype and then it completely fell off a cliff and it dropped from the 70s down to the very, very low teens and has since been making a comeback. But again, in my opinion, we could still make the argument that the stock is overvalued. So even if we draw out our trend lines from these bottoms here, again, this is the bottom June 6, 2023, low 1243, right? So even if we come up like this, you could see that technically, while staying above this support trend line here, even if it comes back down, you can see, look at that, we're looking at 18 potentially. So this company, this is why I'm saying, we could potentially be forming this bear flag now after this drop, and then we could potentially fill this gap back to the 20s. And then again, markets have been raging. So if we do happen to sell off, pull back, we could see potentially $18. And then, of course, if we happen to break the support trend line, we could drop back down to like this consolidated range back here of about 15.5, it looks like maybe. So unfortunately, anything can happen, and that's why I say be very, very careful with some of these stocks if you can make the argument that they're overvalued, and more importantly, if markets are at highs. Because if we do start selling off, I promise you, something like Sentinel will not hold 22, and you can easily make the case to bring this back down to this trend line, and then potentially even lower back into the high to mid-teens potentially. But again, that's just my opinion. But let's look at some of the numbers here on this stock. Okay, so on the revenue side, the company coming in well above expectations here for the last 3 years in a row. On the quarterly side, 3 beats of the last 4 quarters, very nice. On the annual EPS side, we had a miss in 21, and we've been in line and above expectations for the last 2 years since then. On the quarterly side, again, we looked at this before, the company doing very, very well quarter over quarter on the EPS side. Definitely cannot deny that growth. The debt, as you see, jumped up here from 19 to 20, jumped from 19 million up to 42 million, and year over year has been slowly stepping down now to the low 20 millions here as of 2023. The company jumped up there on the cash for last quarter there, cash of over $250 million, and we can see the cash flow was minus 31 million, minus 15, minus 26, as of last quarter, minus 10. So obviously getting that cash flow towards the flatness or potential positive number obviously is a good sign. The debt again, 27 million, 26 and a half, 25, sub 23, basically the same, sitting at 22.93 million. So at least the debt has not increased. So the fact that they're keeping debt in line and potentially bringing it down quarter over quarter, in my opinion, good sign. We got some cash. We have assets outweighing liabilities in both the short and the long term. Our assets are now up above 2.3 billion as of last quarter. That's the highest it's been going back the last several quarters. However, from this point, again, we can see that we increased about 50 million from where our assets were in Q2 of 22. However, our liabilities have chunked up about 40%, going from 525 million to 727 million. And what that translates to is a little bit of a lower equity value, as you see here. Total assets minus total liabilities yields total equity. And you can see we were at 174. We drop into the high 16s, low 16s, sub 16 as of the last 3 quarters. Not necessarily the biggest red flag in my opinion, but obviously it's just not moving in proportion. But assets still outweighing liabilities, roughly about 3-to-1 ratio, so I wouldn't necessarily call it a huge red flag. We looked at the debt, and again, the stagnation that you're seeing here in the assets over time, while the liabilities were growing, again, that eats away at the equity, which again eats away at the book value, which you can see was sitting at 620 and dropped to 6, about 5.5, and recently broke to sub 5.5, sitting right now at about 530, but that's about, 4 times book value. Not the craziest valuation we've seen. So this is why all I'm personally looking for in this situation would just be a little bit more of a sell-off. That's why I'm saying look for that potential gap fill and this potential bear flag to be forming, and we could start to sell off again and take that next leg lower. And all I'm saying is if you were looking to average down or take a new position in this company, in my opinion, you would be able to get a little bit more of an attractive price, but we have to see if that bear flag does form. Revenue climbing very, very nicely here. Cost of goods seem to be in line. Revenue minus cost of goods yields gross profit. We can see gross profit was climbing up the tens of millions, got above 100 million, and has consistently been increasing. Gross profit minus operating expenses yields operating income, and you can see even though the operating expenses are outweighing the gross profit and it's yielding negative operating income, we were well over minus 100 million for several quarters here. And now we've been chunking up here, minus 91 million, minus 81 million, as of last quarter, minus 78.84 million. So a lot of these numbers are trending in the right direction. Again, not bashing the company at all. Really seems, in my opinion, to be a very, very good grower. And I could also appreciate the fact that the cybersecurity space is growing rapidly and everyone's looking to protect their data and all of their tech and whatnot. So I can appreciate the value and also the necessity for a company like this. So again, I'm not saying I wouldn't personally, in my opinion, I would want to be a part of it. But again, if I can potentially get shares for 20 instead of 22, 23, obviously that would be better. If it does seem like markets are going to start to sell off and then something like this may get beaten up, again, as I said, you could potentially see maybe around 18 if it comes down and retest that trend line. So again, I do like the company and I like a lot of these numbers. I personally would just look for a little bit of a better price, but if you bought towards those bottoms there at 12, 14, 15, and then you were up big and now it took a hit, in my opinion, I wouldn't get too upset about it, honestly, because chances are, obviously, if you bought at that price, you're still up nicely, right? But also on the flip side, again, the company's saying that next year, 812 to 818. Yes, it was slightly below analyst expectations, but as it said, the midpoint of that range is still showing 30+% growth year over year. And that's why I always say, in my opinion, just follow the money. Follow the money. And if you were up nicely and you're upset that you didn't take profits or you wanted to buy more and then it went up big, now you don't know what to do. That's why I'm saying, in my opinion, some of these numbers could be viewed as overinflated. You do have some technicals lining up. So if you were looking to potentially average up, That's why I'm saying you could maybe see 20, 18 a share instead of forcing your way in here at 22, 23. But a lot of these numbers do seem to be trending in the right direction here. Price to sales was up here at almost 23, comes down to as low as 8. Recently climbed back up here to double digits. Price to book, this is technically the highest price to book ratio going back the last 6 or 7 quarters, but it was trading at around 4 times book value at one point before. Enterprise value, again, technically when another company is willing to pay for it, showing an enterprise value here of about $6 billion. So, you know, you could see about 10, 12% more sell-off from here. That's why I'm saying, right, 10% drop. In my opinion, that would be perfect. That would bring it right back down to that 20.5. That would fill the gap, right? That would probably scare out some I don't want to say uneducated, right? But let's just say non-professional traders, right? In my opinion, that may scare some people out. And then that would be potentially viewed as the new bottom and people would start buying in. And that's why I always say, in my opinion, it's better to piece your way in instead of going all in. Because if it does form that bear flag and chunk down and fill that gap, and you start buying at 20 and change, and then it pulls back again and tests that support trend line that we looked at, well, you bought some shares at 20, now you can buy more shares down at 18, right? And then for, you know, God forbid if it breaks that trend line and it drops down to 16, 15, you can add in a little bit more, right? So now your cost basis is like 17 and a half, 18, even though you first started buying at over 20, as opposed to going all in at 20 and then immediately losing, you know, 20, 30% or something. But that's just my opinion. I know everyone has different strategies, but the return percentages seem to be moving in the right direction. They were a little bit better, but they are rebounding here, so we can't knock the company at all, in my opinion. The gross margin percentage had a slight dip here, but has been growing very, very nicely here. And again, even though a lot of analysts may beat up a stock like this because it's just not consistently increasing no matter what, quarter over quarter, you and I both know that the business world is very complex and there could be a bunch of different factors that affect, you know, something like your gross margin or your operating margin percentage. So in my opinion, yes, it technically did go down, so you could view it as a negative. However, going from the 60 range and still maintaining the 70 plus range, in my opinion, I view that as a green flag, not a red flag. Operating margin was well over a loss of over 100% and has come all the way up to minus 45%. So this is why, in my opinion, the company looks like they still need to bring in more revenue to really get some of these metrics to the flatness or potential positive side. But in my opinion, I mean, the revenue really is growing nicely. And you know, they're in a key space, again, cybersecurity. So as long as they keep doing what they're doing, if they're forecasting 815 million or whatever next year, then chances are these numbers will get even closer and narrow those losses even more. And then again, for the next year, if they're looking for $1 billion plus, that'll bring them even closer. And then the next year, whatever, 1.18 billion, you know, and hopefully that'll bring them flat or potentially positive. So that's why, in my eyes, I really can't deny the growth here in this stock. I would just personally look for a better price. EBITDA, earnings before interest, taxes, depreciation, amortization, was sitting at almost minus 100% and has, for the most part, been consistently increasing quarter over quarter. Now, as of last quarter, minus 28% from almost minus 100%. So that's a 70% rise here, really, over about the last 18 months. So this is why I'm saying the company really seems to be doing a lot of things right. And I think the more time you give it, the more value, in my opinion, you're going to see here. The net margin percentage, we looked at this before. Very nice that the more the company is bringing in, the closer to flatness this net margin percentage is going, sitting here at about minus 94% as of last quarter, minus 41.33%. So those are big gains in my eyes, just over, you know, 6 or 7 quarters. Asset turnover, again, how much revenue the company is generating off of the assets that they're holding. As you see, 0.14, 0.17, getting up to 0.2. 0.23, 0.26, 0.27 as of last quarter. The debt ratios, yeah, the debt's been pretty in line. We do not pay a dividend. And look at the EPS side again. That's what I mean. You know, we may potentially want to beat these companies up in the immediate short term for any negative we can if they're potentially viewed as overvalued. But looking at the consistency of this stock, you really can't deny it here, looking at both the top and bottom line. As we see on the EPS side, the company has beaten now for 8 quarters in a row. And annually, again, we had a miss in 21 and haven't missed since then. And you can see for 2024, expecting positive EPS. And 25 and 26, wow, that's actually a nice jump. Going from 2 cents a share to 27 cents a share, almost doubling it to 52 cents a share in 2026. So we can have a stock now. This is what I'm saying. We can have a company now that could be viewed as a little high. Our markets could be viewed as a little high. And this is why I'm just trying to cover all bases, right? Because again, if you're asking me, oh, 3 years from now, where's the stock going to be? Well, in my opinion, if they do what they're saying they're going to do, then in my opinion, we can easily say potentially $35, $40 a share, right? We could see a double and maybe even more over the next couple of years. The problem is, if it's viewed as overvalued now, and again, we have a gap fill, we have a potential support trend line we might test, and we have markets at highs, then this is why I'm saying if everything just kind of reverses and starts to drop, yes, you could still see $35, $40 a year or two from now. But in my opinion, like I'm saying, you could potentially buy in at 20, 18, 15 instead of just forcing in here, just, you know, looking at the green saying, oh, I got to own it now. It's going to explode. But quarter over quarter, the company's been doing very, very well on the revenue side. As you see here, one miss here of about 2.33%, Q1 of 23. That's the only miss here going back the last 8 quarters. And on the annual side, the company is growing in line and even a little bit faster than what Wall Street is expecting. And see, look, I honestly didn't even look at these numbers, but as I said before, 800 million, and then the next year, you know, a billion, then the next year I said, what, 1.1 or whatever. But as you see, 800 plus million for 24, over a billion expected for 25, and over 1.3 billion expected for 26. So with this company expecting this growth, this is why I'm saying, again, in my opinion, I personally would understand if you wanted to be a part of it and you wanted to own shares of the company. In my opinion, I think it's going to be really good. But we just have to be patient, in my opinion, and try to get, you know, a better price at a better time. The U.S. revenue basically doubled. International revenue up about 150% year over year there from 21 to 22. This is why, unfortunately, again, this company just happens to find itself in the right space at the right time, because we're in this massive tech age and everyone basically always talks about cybersecurity and hackers and whatnot. So that's why for a company like this to just consistently sign, just for a company like this to consistently sign new deals and consistently see increases in revenue, I actually think it makes sense. And in my eyes, it's justified. But again, potentially we can get a little bit of a better price. RSI on the daily sitting here at 35 2/3. We're sitting right here at the support level of 22.67, and you can see markets closed before us. Stock closed 22.85, so technically above that support level. But again, we had our big drop potentially forming our post, and we could potentially be flagging, so we could drop back down. Again, that gap fill was around, what, 2040, 2050, and we can see that. Let me see. Look at this previous support level here, 2031, and then you're going to potentially meet up with your 200-day moving average of about 1974. So that's why I'm saying we could potentially go down before we go up. But again, if you're asking me over the years, is this a good buy? In my opinion, it really does seem like a good buy. It really does seem like a really good grower here, in my opinion. But going all the way back to about mid-November, that's when the stock got back above the 50 and 200-day moving averages. And really only recently, on that slight below estimate outlook, did it just break below the 50-day moving average? So that's why, again, to bring it down below the 200-day, if markets aren't really getting beaten up, in my opinion, might not happen. But if you tell me, yeah, this could easily drop 10, 15%, fill the gap, retest the moving average before bouncing, in my personal opinion, that would make sense. That would make sense. But it did chunk down, and then you can see the RSI looks like it just about hit that 30 benchmark, and then boom, you had a little bit of a pop the next day, right? So we could potentially keep an eye on some of these metrics because it might not just consistently sell off and drop down no matter what. However, when it was running up here in December, we could see the RSI was well above the 70 benchmark for essentially the whole month. So unfortunately, in my opinion, this might not be the main indicator to use here. MACD has been slipping down, falling off. Let's check the weekly. And on the weekly, again, we're actually right near a key pivot point here, 2261. But again, we have our big drop and a potential flag forming. So even here on the weekly as well, you can see now the 50-day moving average down here in the 19s as well, 1954. MACD recently crossed to the downside on that big drop. So that's why I'm saying we can now potentially break and drop down into the 20, sub 20 range and retest these moving averages, in my opinion. But let's check the Bollinger Bands very quickly. Okay, we were riding high, recently broke the mid Bollinger Band. Bottom one is curling and climbing very nicely. Okay, that's why I said, see how it stays in the range of the Bollinger Bands for the most part, unless, you know, positive or negative catalysts come out. But now you can see that the stock was up for a decent amount of time and now kind of slowly pulled back. So we have the curling of the bottom Bollinger Band. So this could potentially, again, nothing is set in stone. Anything can happen. I need you to understand the risks involved. This stock could go to zero. The company could go out of business. But this could potentially be now your new kind of low of lows. And even if we have like a big red day and they really start chunking the stock down, you may get to like that 16.5. What I say before, maybe around 1560 or something. So that's what I mean. It could start to pull back to the bottom Bollinger Band here as it's coming up. Could have a potential flash crash and then kind of reclaim and go back higher from there. But again, we had that slight negative news come out, could make the argument it was overvalued. Now we're sitting at key pivot points with the potential bear flag and some moving averages maybe that could get retested. So again, that's why I'm saying I do personally like the stock. I just think it may go down in the short term before finding that bottom and then climbing back up into the 20s here where it was. RSI on the weekly sitting here at about 49. Yeah. Yeah, in my opinion, I would minimum personally, I would wait for a 10-15% sell-off. But again, we looked at what a lot of these analysts were saying, and everyone still seems pretty bullish on it. Even with the company supposedly coming in slightly below what analysts were forecasting for this year on the revenue side, everyone still seems pretty bullish on it. We have 33 analysts currently covering this stock right now. We have 17 giving it a strong buy, 2 giving it a buy, 12 saying to hold, 2 giving it a sell, yet all of the price targets are currently above the current stock price of $22.85. Average price target of about $30 a share. So this is what I mean. We could potentially beat it up in the short term, but again, this consistency here, this growth, and even moving forward, look at this now for next quarter, above 180 million, 197 million, 212, 224. The percentage rate at which this company is growing its business, in my opinion, is absolutely phenomenal. And again, on the annual side here, chunking up again, 200 to 400, that's a 100% move. Then you go from 400 to 600, that's a 50% move. 23 to 24, you're looking for 600 to 800. That's a 33% move. 24 to 25, 800 million to over a billion. That's a 25% move from there to there. And now from 105 to over 13, if they keep this course, of course, from 105 to 13, you're talking another, 25, potentially 30% growth. So to have the revenue chunk up that much, but still showcasing that, yeah, we're still going to grow 20, 25, 30% year over year from even these higher levels, in my opinion, it really is phenomenal. And I do understand the hype behind it. And, even if you don't want to hear it's going down and you're buying more no matter what, but believe me, I understand. And as long as the company can keep delivering and keep doing what it's doing, I think that, in my opinion, even if you bought some today and then it drops down here to 18, again, in the short term, it will suck. But I think, in my opinion, in the long term, I think this one is going to grow nicely. And I still say, unfortunately, if they didn't overvalue it, in my opinion, out of the gate, this probably would have been an amazing climber. It really probably would have been an amazing climber. However, chances are this company, again, still, even with this revenue coming in, is operating at a loss. So I can appreciate the fact that they basically just took, as much as they could. And looks like they came out at around $40 a share. But again, after beating it up, with the growth of revenue, again, coming in, having the stock find its bottom, right? It found that bottom on that miss. And as we see, that was really like one of the only misses that the company had. And then all of a sudden it was undervalued, it was fair valued, right? People looked at the growth. Wow, they used to do 40, 50 million. Now, they just missed, but they just brought in 134 million. Now, next quarter, they're forecasting, 140, 150 million. So this is why I'm saying I understand. They brought it down to the bottom, but now since then, it has been climbing up. But it did have a big gap up there. It went from about 20 and a half up 10% to 22, and then ran all the way to 31. Right? So it went from 20 and a half to 31 after beating earnings. That's a 50% rally. So that's why I know all we want is our stocks to go up so everyone can make millions of dollars. But unfortunately, when you go up that much that quick, you have the potential to go down that quick as well. And that's what I think you're seeing here. Guidance came out a little low, even though it was a nice beat. Stock took a 10-15% hit. It's been bouncing around, and that's what I mean. Potential bear flag forming, potential gap fill back into the 20s, potential retesting of this support trend line at 18. And of course, we had the two moving averages, both like 19 and a half and like 1970, I think they were. So that's why I'm saying, in my opinion, conservatively, I would wait for about a 10% pullback, if not more. But overall, I like SentinelOne growing very nicely. And in my opinion, 2-3 years from now, if they do hit that billion plus revenue mark, chances are everyone will continue to pile in, speak highly about it. Analysts will most likely maintain overweight, ratings. They'll probably maintain buy ratings, and they'll probably maintain, if not increase, price targets moving forward, which, as we know, all translates to positivity for the stock price. And I'm going to end it there. So once again, this is Stocks by the Numbers. I want to thank you guys for stopping by. If you have any questions, comments, or concerns, drop it down in the comments section. I'm usually very quick to reply. Thumbs up, algorithm helps me get more eyes on the channel. And of course, subscribe to the channel. That is our handshake agreement. That is how you help me help you. But more importantly, moving forward, like I always say, I understand that markets are rocky and volatile and very uncertain. So I want to wish all of you success. I hope everyone makes a couple of dollars. Thanks for stopping by. You guys have a good day, all right?